Welcome to the Pro Tickers Deep Dive, your go-to breakdown of the stock movers and major stories at the close of global trading. Let's dive into today's market action. Today, we're seeing a market really driven by both calculated corporate strategy and some unpredictable policy shifts. It highlights how companies are adapting to a rapidly evolving economic landscape. We've got
Yeah,
significant merger developments, unexpected political shifts, and some key strategic partnerships all moving the needle today.
that's right. And kicking us off with uh, a really massive strategic move.
Hmm.
A major wireless networking merger just cleared a significant legal hurdle. A settlement was reached just weeks before trial, high-profile lawsuit. And this paves the way for a $13 billion acquisition deal between two large enterprise networking firms. This is more than just a big number. It sort of sets a precedent for how regulators might view consolidation in essential tech infrastructure.
That's a fascinating point about precedent. And we saw an immediate impact on share prices, right?
Absolutely.
The buyers' shares shot up as much as 15%.
Yep, 15%, and the target company stock surged up to 8%. Big moves.
Wow, that's a massive jump. But beyond that immediate surge, what does this $13 billion deal truly mean for the broader competitive landscape? Could we see a ripple effect, maybe other players feeling pressure to consolidate, or does it signal maybe a new era of antitrust leniency in wireless?
Well, it absolutely suggests a move toward fewer, larger players in this space. And that impacts everything from pricing power to long-term innovation. This isn't just about market share. It's really about reshaping the fundamental structure of enterprise wireless solutions. Now, that massive strategic move highlights how corporate decisions drive value. But, sometimes it's government policy that delivers the biggest jolt, like we saw with the Senate vote on amendments to that sweeping tax and spending bill.
Exactly. Yeah, this particular vote has really shaken up clean energy stocks. The bill includes major cuts to clean energy incentives, specifically hitting electric vehicle credits. And the industry has been quite vocal, calling these proposals harmful to national progress. It's clear investors are really sensitive to these incentive changes.
Oh, they certainly are. Clearly, policy shifts have immediate ripple effects. We saw shares of a leading EV company drop more than 1% in early trading.
Mm-hmm.
A large renewable energy firm fell up to 5%.
5%. Wow.
Yeah, and a solar tech company declined more than 2%. These moves reflect, profound investor concerns about the implications for sustainable sectors. Specifically, how these policy shifts might impact long-term financing and the project pipelines that drive growth. It's a stark reminder of policy's immediate ripple effect on market sentiment. Now, switching gears a bit for some rebound news. A prominent AI and data analytics stock staged quite a recovery today. This was after being the worst performer in a major index on Friday, where it closed down nearly 10%.
That's a significant turnaround. Quite the bounce back. So this stock actually rebounded by as much as 5% today.
That's right, up 5%.
And that boost followed news of a strategic partnership with a leading government consulting firm. The goal, I understand, is to enhance AI capabilities for federal agencies.
Exactly.
Now, based on recent market data, this single move alone could add more than $15 billion to the company's market cap.
Yeah, that's the potential upside analysts are seeing.
Wow, $15 billion from a single partnership. That's the total value of all its shares, right? So it signals how much investors believe this boosts future earnings. What makes this particular government consulting firm so impactful? And how does this deal leverage the company's AI capabilities differently than maybe other partnerships?
It's a fantastic question. This isn't just a general tech partnership. It's a highly targeted play into the federal sector. And that often involves long-term, high-value contracts, stable revenue streams. Despite some mixed sentiment from analysts, this stock is still up over 70% year to date.
70%. Still, even with that Friday drop.
Yep. It really underscores the market's ongoing fascination with AI and its practical applications, particularly when it comes to leveraging that technology for stable government-backed revenue.
Okay. And speaking of diversified portfolios, shifting again slightly, an entertainment conglomerate saw its shares climb up to 2% this morning, and that followed a bullish analyst upgrade.
That's right. This upgrade, which implies analysts think the stock is set to rise, it cited a few key reasons. Minimal risk of a slowdown in theme park attendance, strong upside potential they see in their cruise segment,
Okay.
and really promising profit potential from streaming operations too. This all connects to the bigger picture, really. Diversified consumer entertainment portfolios are showing remarkable resilience,
Hmm.
even amid uncertain economic signals.
So it's about having multiple streams of income, essentially.
Right. Exactly. It's about adapting to evolving consumer habits and offering multiple revenue streams that can weather different economic headwinds. The takeaway here is that these broad entertainment offerings are proving to be a kind of stable anchor in choppy waters. It's all about diversification and adapting, even in a shifting economy. Today's market action clearly illustrates the dynamic interplay between corporate strategy, government policy, and evolving technological landscapes. Understanding these nuanced connections is key to navigating the financial world effectively, offering insights beyond simple price movements.
Indeed. It's a powerful reminder that while daily price movements grab headlines, the real story often lies in those underlying shifts. Regulation, innovation, consumer behavior. Keep an eye on how these big picture forces continue to reshape, your portfolio's landscape. Thanks for listening, and we'll see you next time on the Pro Tickers Deep Dive. Stay sharp and stay informed.